on the website. This is where I talk about follow-through, and I talk about these different patterns that you should be looking at. Here, especially when you see this big volume spike, well above average, and the market cannot make a new low, that is a sure sign that the market is not going to continue. And, as I've said, liquid markets hate going nowhere. They hate going sideways. So the only thing really for this thing to do is to turn around and go back to the upside. You had a good little dipper pattern right here. Again, this is on, I cover this on disc 5 and on disc 6. Also, I cover this in the advanced tactics on the website. There was your little dipper entry right there. Again, if you're looking for trading opportunities in the day, plenty to go from. Also, as the market was breaking through support here back to the upside, you had, if you were, pardon me, I just got carried away. Breaking through resistance here to the upside, if you were looking to catch a quick trade, there was another possibility, although this would have been a very aggressive trade. Let me briefly talk about why you might have been looking at that, and it's just summed up in this. Momentum. Look at this. Price moves from here all the way back up into this area very, very quickly, closes near to the high. That's a very good sign that this momentum is going to continue. This is a low-risk entry because the momentum should continue. You can immediately go over your 15-minute chart right there. If you don't see price following through on the very next 15-minute bar, you get out. You've got maybe a 20 or 25-point risk with, as you can see here, nearly 100 points worth of reward given the momentum that was in the market. So, what are we setting up for tomorrow? Really not a whole lot. Just because of the size of this bar, I would say that we've established a very nice breakout area. So I am looking for a breakout coming through here, but I'm not ready to put on an autopilot trade simply because we've got such mixed signals. So I'm looking for possibly a possible breakout above this high. That would put long trades at 1.9978. This is going to be a 35 pip stop. Again, keep your eye on the 15-minute bar. If price does break through 78, you don't want to see momentum die off. If you see momentum die off on the next 15-minute bar, get out. Just drop the trade. Coming down now, we've got several different areas that we can use for a potential move down. I actually like a break down below 9,900, and given the trading range here, I do like short. This is going to be just above 9,900, 1.9915. Again, stop 35 pips, but I can't stress this enough. This is not an autopilot trade. This is a pure momentum trade. So as the market starts to break back down, now let me rephrase this. If the market is trading up, okay, so you can see here it's at 99.06 already. So if the market's trading up, it gets back up here to 99.40 or so, and then starts heading back down, is when we can activate this trade. So you want to be very careful with this. Given the trading history here with the pound, I think we can get a fast break on the pound back down here to about 98.20. This stop again is just to take into consideration if you get a fast market. Same rules apply. If you see the market breaking down through 9,900 and the 15-minute bar is not showing momentum like you see over here, get out. Okay, this is pure momentum trade. So keep your powder dry. Remember, a lot of news announcements packing in to the next couple of sessions. I've got to go to fly to Dallas for a couple of meetings with some ministry partners. So it's going to be a half day for me on Friday. I will post the weekly wrap early in the morning. I hope you have a profitable day, everybody. Look forward to talking with you soon.